Welcome back to the trading desk. As you can see from the charts that we just showed again, the markets continue to struggle in that we're still below the year's highs or the openings of the year, both of those instances. So a couple things we want to talk about here. We've got a special guest with us, David Buffalo, all the way in from South Carolina.
Greenville, South Carolina, just outside.
Greenville, South Carolina. And Nicole and I are always talking about social media, and we've got two guests today. David is the first, who, again, I've met through social media, Twitter, Facebook, StockTwits, all these different reach outs for traders.
It's amazing the number of people that I met, not only in the United States, but across the world through social media. It's incredible.
Yeah.
And every one of them, I'm not just making this up, have been really great individuals, people who share a lot of knowledge and who have a lot of experience.
So for all the naysayers out there for social media, I would say that you can make great contacts and reach out and try to meet these people face to face. Don't just sit behind the screen, get out there and meet them. That's definitely one thing we do. Today we want to talk a little bit about, with David, margin. Everybody always asks about margin, Nicole.
So how would you define margin trading? What are the advantages, the disadvantages?
David, you want to
let me elaborate on this, because I've been an investor and a trader for almost 35 years now. It's hard to tell, huh? You can see by the hair on my head.
The stress.
It's a long time. But the thing about it is, margin can have its uses for someone who is skilled at a trading strategy. And let me explain. Particularly with stocks, you basically can borrow, in essence, half the value of the stock. That's where you get your margin rate, your basically your T2. I always get the number, but it's 50% margin, basically.
So for every dollar you have, you can get another 50 cents.
Another 50 cents out of it.
You can play with more money than you have.
Right, and that is the dilemma. If you have a strategy that has, basically that has risk management stops and targets, margin can be quite good. But if you don't have a strategy, you're going to lose money quicker than you ever thought you could. And that's why margin can be dangerous, but I don't disagree with using margin if you have a strategy. Now, there is a difference between, I don't want to get too lost in the sauce here, between margin and leverage. For example, in Forex or foreign exchange, you have the leverage of the contract, which in essence you're in essence borrowing or trading a large sum of money for a small contract size.
So to clarify a little bit, David, what you're talking about then, there are certain vehicles beyond stocks, and we talk about these all the time. You have stocks, you have options that are marginable, obviously, to begin with. They're marginable products, so you have to have a margin account to even trade in these. It's the same in Forex, it's the same in commodities, it's the same in futures. So you need to understand when you're looking into these vehicles what the different margin requirements are, because the vehicles themselves already provide you leverage, if you will, just by getting into it.
And now, speaking of margin, now how do you know which strategy is best to implement? And what are a few strategies that people can really use?
Well, it really all depends on, for example, I swing trade, for example, and for the purposes of swing trading, I know what my risk parameters are. Now, I don't want to get too lost in the sauce again. I use things like average true range, which in essence is you're looking at the price movement over several days or several periods of time. And what I'll do is I may use like a 200% of that particular average true range as my stop. That's the limit of the amount of money that I'll lose if I'm wrong, because I set that as a parameter to keep my discipline in place. If my discipline is in place, then I can use margin to that advantage, as long as I know that my
so again, it all comes down to contextualizing the market. What do you want to trade? What is the time frame you can commit to it? And can you sit in front of the screen and do intraday trades? If not, then swing trading is probably the most basic thing that you want to look at.
So can you talk to me a little bit about, I've heard about, is it guerrilla trading?
Guerrilla trading is where you basically will take a position home, long or short, and bet that it's going to continue up or down, whichever way, the next morning, and then you're out. So it's a simple strategy.
Somewhat of a short-term trend.
It's really a momentum, exactly. If you think the stock's going to continue going up, you buy it at the close, looking to just sell it on the gap up in the morning.
Okay. Well, thank you so much for joining us, David, and I'm sure we'll be consulting you more, and we're glad that you're out there in the Twitter universe to give us more advice.
There you go.
And if you want to follow David, he's at Iron100 on Twitter. That's at Iron100, the number 100. So you're watching COTV.
The Trading Desk. We'll be back in a minute.